Hi, everybody. I'm Alex Sequoy. Welcome to the Cleveland State University Monte Ahuja College of Business webinar series called Best in Biz, where we talk to experts from everywhere about the hottest topics that are influencing business today. And I'm really excited. The topic today, it just keeps evolving. Every day there's a new headline. It is about the global banking crisis. And I am so thrilled to have these two gentlemen in the room right now. And I will share some information and some background on both of them. But first, I just want to say welcome, Chris, and welcome, Rami. The three of us all went to the University of Rochester Simon School of Business together over 20 years ago, even though we haven't aged a day. And we witnessed some things, but we also went to a school that was very much known for its finance. And so I'm not the finance expert in the room, but these two gentlemen are. And now I will share their backgrounds. And just real quick, I do want to welcome our students, our faculty, our administration, and everyone else who has joined from all over. I think we even have some global views today for being here today. And I also want to give a big shout out to Heather in the Dean's office for putting all this together and making this production possible. So Chris, I'll start with you. And I am going to do some reading with these bios. This is not something I can do off the cuff because you're both just so impressive and you've done so many amazing things. The background that I will share before I start reading your bio is that, Chris, you are from upstate New York, correct?
Mm-hmm. Yeah.
And fun fact, his grandpa was the dean of the Simon Business School, right?
Mm-hmm.
Yep. So business is in your blood. And when you graduated, you did move here. And this is actually where we met.
Yep.
So I'm grateful that you're here. So here's a little bit about Chris. He's the principal risk industry consultant for banking and financial services with SAS. He's experienced in credit risk analytics and 13 years of experience of quantifying commercial credit risk. Mm-hmm. If you want to talk about risk, Chris is the man to talk about risk. Mm-hmm. He also has a lot of experience in developing cross-functional teams and leadership. He's very much a people person. He's come to this university so many times to not only guest judge our students' presentations, but also to help decode, if you will, the mystery of finance for our classes. So thank you so much. And you have this way of just taking very complex models and complex ideas and simplifying them and making people feel comfortable about those ideas that otherwise don't feel so transparent. So you have that skill. And so thank you for bringing it here over and over again. We are so grateful for your support. And Chris is also very well versed in just about every quantitative finance model that exists. He once said this statement to me. He said, Alex, around this one specific topic, we did all the research that is available everywhere. And when Chris says something like that, he really means it. He will dig deep and he will go after every research that's available. And when he did move to Cleveland, he dedicated most of his career here to banking. And I will just share some titles in chronological order. He was the VP of Corporate Portfolio Management with National City Bank, VP of Senior Quantitative Analyst of Commercial Modeling with PNC Bank, Director of Commercial Risk Model Development with Key Bank, and Senior Director Bank Risk Modeling with Comenity, correct?
Mm-hmm.
Awesome. He also, like I said, earned his MBA from University of Rochester Simon Business School and his Bachelor's of Economics from University of Buffalo. Again, thank you for supporting our students. Thank you for being here. Welcome back, Chris. Welcome back.
Thank you. Honored to be here as always, Alex. And thanks so much to Cleveland State School of Business for hosting us again. Happy to be here.
Thank you. And Mr. Katz, I don't think we ever call each other by each other's first names. It's always Mr. Katz and Mr. Koi. This is just how our friendship has been for 20 years. So Mr. Katz is a global citizen, and I will share some of his extraordinary background. And what I absolutely love about our two panelists today is outside of the shared MBA experience, their backgrounds could not be more different. And this is what I really like. I love the diversity of experience and diversity of opinions. I've actually welcomed them to debate on certain things if they disagree with them, which I would welcome. So without further ado, Rami Katz is the Chief Operating Officer for Excel Partners, managing Excel's due diligence and investment process. Prior to joining Excel, Rami served as Director of Technology and Commercialization at High Tech Rochester in New York, where he worked closely with entrepreneurs, researchers, and startups to evaluate the commercial potential of new technologies, and he also managed the creation of over 50 business plans that led to raising over $40 million in funding from VCs, angels, and grants. And one of the things that, Rami, I don't know if you even realized, but 20 some years ago, you made Rochester home, and now you're building upstate New York. I mean, what an amazing thing, right? Like, you're not a native of this country, but you not have only made it your home, but you're also building it and you're growing it, and you're making such a powerful impact into not just local economics, but globally. And so it's very impressive. I know you'd never say that about yourself, but I am here to say that about you. I think it's very, very impressive. Additionally, Rami's an attorney, and recovering attorney. But also you grew up in Israel. Wasn't your first country, but you grew up in Israel, and there you were in the military. You also got your law degree from Tel Aviv University. You were a practicing attorney there, but also on the business side of things before you moved to Rochester. And one of the things that I think is really powerful is that Rami also gives back in that he teaches classes at Simon Business School and with the MBA students. And how many times have you taken your groups to Israel to meet with VCs and companies over there? How many times has that happened?
9 years now.
9 years, that's amazing, right? So you're, again, crossing all kinds of global boundaries and exposing upstate New York to the world, exposing the world to upstate New York. And I think it's amazing what you're doing. And I know this is your first time here, but I hope it's not your last. And welcome. Is there anything else you need me to know or the audience to know about who you are?
You already know way too much about me. Thank you so much for this illustrious introduction. And it's a pleasure to be here. And hopefully I can add some comments that make sense and add some value to the students. And we appreciate
I know you will. I know you will. And I will do like a true confessional global wide that it is because of Mr. Katz that I actually passed finance at the Simon Business School. If it wasn't for him,
did it on your own.
I literally would not be sitting here right now. And that's true. That's true. Our finance professor was actually on the board of NASDAQ, so it was a little intimidating, especially as a first-year marketing student. But let's talk about the topic. The topic is heavy. The topic is current. The topic is never ending. There's always headlines. And I know that the three of us have been texting all kinds of headlines just over the past couple of hours and days. But I want to set a little bit of context because our audience is so diverse. People have a slightly different set of knowledge, skills, and background about what is happening with the global crisis with banking. So some of the things may be familiar to members of our audience, some may not, but I want to make sure I give it context. And I also want to state the caveat that whatever headlines or news or any kind of stats that I will be sharing today all come from credible global publications. I'm very cognizant of where I get my information from, and typically it is information that is shared in more than one media. Right? If it's shared in just one media, I always have to double check. So whatever I may rattle off for context, it does come from credible global media, from all kinds of media. Okay, so let's get started. A couple of things that happened. In March 2023, both Silicon Valley Bank and Signature Bank in New York were listed, quote, as failed by the FDIC. And the FDIC list of failed banks is really long. So what does this particular failure mean? And why was the news so much bigger about these banks versus back in October 22, when both First City Bank of Florida and Almena State Bank also made the FDIC failing banks list? In other words, there's an ongoing list of failed banks with the FDIC. Anyone can look it up on the website. What is it about these two banks, plus the news that just happened yesterday? Why is this so big? Rami, would you like to speak about it first, and then we'll take it over to Chris?
Sure. I think I have more experience with Silicon Valley banks than Signature Bank. So I manage a venture capital fund. We work with startups. Silicon Valley Bank was the bank for startups, right? And that's part of the exposure and the profile here. It's It's a smaller bank, but it's one of the go-to banks for a whole sector of the economy. That's for startups. I think what's interesting, obviously, is the fact that the bank failed, right? And there was a big rush, and it came out to it after it. To me, Silicon Valley Bank is a little bit of a different animal in the banking world. It's different lending practices. We have personal experiences. One of our portfolio companies, for example, had about almost $4 million of its investment dollars in SVB. And when the news hit, there was a period of 4 or 5 days where the business could not draw that money out, right? So I think startups have a relatively very high profile in the economy overall. Silicon Valley Bank, because of that, had a higher profile than there are many banks of the $100 billion and type of assets. Most of us never hear about them, right? SVB is much more common. So I think that's you have the notoriety effect, the domino effect of affecting a lot of startups. VCs kind of rushing in, so you get more attention and people know where the spotlight is.
Great, thank you, Chris.
Yeah, I think some of the differences, Alex, and you set it off perfectly, is size. The banks that you mentioned that failed were relatively small. $150 million in assets was the bigger of the two of them, as compared to Silicon Valley Bank, which is over 200 billion. So in terms of scale, over 1,000 times bigger, with the Silicon Valley Bank. And so that's probably the biggest differentiator between the two of those. And secondly, to think about what is a failed bank? A failed bank is a failed business is what it is. And instead of going into bankruptcy proceedings, which would happen in almost every other industry, we have regulatory bodies, the FDIC in this case, here to step in, protect a certain set of stakeholders within this firm, and that is depositors, to make sure that the depositors get their money back. We don't have that in other situations. If a local restaurant were to go out of business due to poor business practices, be risk management or anything else, everyone involved would just lose their shirt and that's it. They close the doors, lock it up and walk away. And the customers, if you ordered food and didn't come to pick it up, you don't get your food back. Well, in this case, we have regulators to make sure that you do get what is yours back. And so that's the purpose of the FDIC, and that's why they stepped in each one of these institutions to protect the shareholders there. Not the shareholders, the depositors involved, exactly.
Right.
Yeah, sorry, go ahead.
No. Go ahead.
I could talk all day.
I know we could. And
Alex, if I can piggyback on what Chris said, I think,
yeah,
especially on SVB, what's interesting. So FDIC, as Chris said, provides insurance. That's about up to $250,000 for an individual depositor. What was unique with SVB was Silicon Valley Bank. It demanded that if you open a bank account with them, a startup company, you have to put all your money that you are raising into that bank, which is not a common banking practice, right? If you and I, any of us open a bank account, we can put some money in Chase, we can put some money in Bank of America, wherever we want to. SVB it demanded it contractually. Whether they had the ability to enforce it or not, it's a different question, but at least contractually it demanded all your money put in that egg, right? So that's how you end up with a startup company that has almost $4 million in that bank. When the money is gone, you were technically all in guaranteed to 250. What do you do with the other $3.75 million, right? And that's where I think this is where part of the domino effect is coming up, and we'll talk about it a little bit later, but you had higher concentration of cash there than average. When the money went away, right, now startups are screaming, said, what do I do? Unlike large companies, I don't have the reserves. If I don't have, sometimes I'm living on very thin margins. If I don't have the reserves, I may fall down completely. So that additional encouragement for the FDIC to prevent the ripple effect, not just into the banking world, and everybody talks about the domino effect into the banking world, but my main concern was what the ripple effect to all the startup world, right? And what will do to the confidence of investors. And we can talk more about, I think, what happened to SVB and Signature. Why did they go away, especially in this era that we are living in?
Great. Thank you both so much. I think we could do like a whole series with the two of you on this. I could see a whole series happening. I do want to read two additional headlines. One is from late March, and it's about Switzerland's Credit Suisse. They also folded essentially. And what I thought was really interesting is that it was a $30 billion rescue deal. And additionally, that bank was open in 1856, right? 1856, this notion of survival, right? And market Darwinism is clearly alive and well. And then just yesterday, First Republic Bank was seized and sold to JP Morgan Chase in the second biggest failure in US history. The last time it was in 2008, during the crisis, during the economic crisis. So there's a lot that's happening. Okay. So again, this next question, we've got a lot of questions, and I know that we're going to then have some questions from the audience as well. And I understand that we could write history books around this, but if you could just kind of concise it to its most essential breadcrumbs, if you will, how did we get here? Do we go back to the market crash of 2008? Do we go back to the crash of 2001 when we were all, in business school? Like, how far back were the seeds planted for the deconstruction, if you will, of the financial industry? How far back do we go, gentlemen? Chris, would you like to start this one?
Yeah, I think that the seeds of this are largely planted from coming out of the 2008 financial crisis. It pushed interest rates to an all-time low. And then for a variety of reasons, I think for good, sound jurisprudence on the Federal Reserve's actions, they were kept low for a long amount of time. There's also political considerations that may have kept them down for too long. But in any case, it created a long and historically unprecedented period of very, very low interest rates that sort of set the stage for this. One thing I want to go back to for just a moment, Alex, is you talked about Credit Suisse failing, formed back in 1865. Old banks failing is not a new thing. National City Bank here in Cleveland, which hired me and brought me to Cleveland, was also founded back in 1845. And they failed because they made a big bet on the mortgage industry back leading into 2008. So big banks that are old sometimes make bad decisions, and that causes them to fail. And that's what happened in Credit Suisse as well. Yeah.
Great, thank you. Rami, do you want to add anything to that?
Sure. I think it's so. I guess I'm not smart enough to go back to 2008 or so. So what's the connections there? I think to me, I'm looking at it more as the current trends that are happening. I think what we're seeing is two things. So first of all, we are all living on social media. So anything that happens, the information gets disseminated much, much faster. So if you go back even 20 years ago, 25 years ago, if I want to do a rush on a bank, if a rush on a bank occurs, meaning all the clients want to pull the bank, there needs to be an old kind of, let's call somebody, let's send them a mail, let's talk to them. They need to go to the bank. I'm working today, I cannot, I'll go tomorrow. The bank shuts down its branch hours, so I cannot withdraw the money. Now, within 30 seconds, all of social media hears about it. I log online, I ask for my money out, and that's it, right? So you can technically have within 5 minutes a whole rush on the bank, right? And if you think about it, that's kind of part of the perfect storm that Silicon Valley Bank was facing. On the one hand, the last year said as a side effect or the next step after the trend that Chris was describing, now interest rates are high, very difficult to raise venture capital. Because why would I invest in a risky startup where I can put my money in the bank and get 5%, right? Why would I take risk? No, I'm not. So it's very difficult for startups to raise capital. Silicon Valley Bank has based its model on, if you're raising capital, put all this capital into my bank, and now I have very cheap access to my security blanket, my 10% of holdings that I have out of deposits. So that is drying out. As startups are starving, and they are the main clients of Silicon Valley Bank, now there was pulling out of my cash reserves out of the bank. So the reserves are being depleted. Silicon Valley Bank takes a bet on long-term debt instruments, which is most banks do that. Interest rates go up dramatically. Now the value of the asset they're holding, right, is much lower, because why would I pay? I would pay less for a low interest instrument when I can get much higher interest somewhere else. So now they're caught in a shortfall of cash, right? They need to raise capital. Their assets that they have are worth less, so then you're selling that. The word hits the street that, oh my God, the bank is in trouble. Everybody panics, pulls out the money, and boom, here we are, right? I would draw a very, very big distinction between that and First Republic, right? Because I think as we saw in the morning, as I saw the morning news, JP Morgan, which is buying First Republic, their shares rose, right? And PNC, the other bidder, the class, the fact they didn't get the bid, their shares went down. So the market clearly thinks that buying First Republic is a good solution, right? It's a solid bank. So to me, it sends a signal. Again, it's very limited data. It sends a signal that this is not a systemic issue in the banking system. We either were able to stop the bleeding, or it's more of a local banks issue of banks that took a lot of risks. And I think that Chris is 100% in the point that he made earlier. Smaller banks tend to be much more conservative. Your community banks, the 100 millions of assets are much safer, are much more regulated. And that's, by the way, that's what we changed after SVB. What we change our recommendation to our startup portfolio. We have about 50 companies in our portfolio. Is change your practices. Work with the large banks. Make sure you keep some money in the smaller regional banks that are here, your mom and pop that will do mostly mortgage loans, et cetera, low risk. You always have access to that money.
Thank you so much. And that really goes back to, Finance 101 when we were at business school, which is diversify. You've got to diversify your portfolio, and you cannot, you literally, like if there's anything I got out of finance is you really cannot put everything into one basket. You just can't. Right. And it seems like today it was an all or nothing game.
Oh dear, looks like we lost Alex here for a moment. I know she mentioned she was having Wi-Fi issues earlier. Rami, I'm going to build on your comments a little bit, and hopefully we get Alex back, and we'll just see where this goes from here. So another issue that I think, like when you talk about like good risk management practices, one of the concerns that I saw with SVB long before that we ran into the crisis was around banking and risk management practices. It's generally said you never want to be the fastest growing bank. And because if you're the fastest growing bank, in one way or another, you're taking on risk that all the other market participants
are not willing to take.
Don't want to take, right? And so you look at SVB from their asset size, and just that one measurement is they went from a $20 billion bank 10 years ago to over $200 billion across a decade. Compare that with any other bank you want to go out and look at. Their asset size don't grow at 10% per year. That's just not how successful banks really go. And so in order to do that, you're right. They ended up focusing on the tech sector and the venture capital firms, and they owned that space, but they owned it because nobody else really wanted to engage with it as well, right? And so they ended up with a lot of concentration risk, if nothing else, and the risk that goes along with it. And you pointed out that so well too. Probably that space, the venture, you know it better than I, but the venture capital and private equity space is so heavily networked. And so when you see your co-fund runners and stuff calling you and saying, or calling their portfolio companies,
it spreads like wildfire.
Yeah, we're concerned about what's happening at SVB. How about you start to, even though we're contractually obligated, let them sue us. Let's start moving some of our money out, right?
Correct.
Like that's probably good jurisprudence on your end, but it spreads so quickly. And we saw that, I think, the day before the FDIC takeover, I think Silicon Valley lost 40% of their deposits in one day. That's unheard of for a bank of this size. And so
you take a very techie community that is very wired and networked, because eventually it's a very small universe, and we live on that information, and especially in our neck of the woods. Our fiduciary responsibilities to our portfolio companies, right? So the first thing when I see a during just sign, I'm going to send a blast to all my portfolio companies, call all the CEOs, get on it now, right? And they're going to jump on their computers and draw the money, right? And so what may have been a small wave becomes a huge tidal wave because everybody's doing it at the same time. Right. Absolutely right. Alex, are you back with us?
Yeah. Thank you, gentlemen, so much for continuing.
Chris did brilliantly. Said I need to double his pay on the moderating side.
No, I really appreciate it. Thank you so much. Mercury is in retrograde, so technology issues are to be expected. But thank you for continuing the conversation and being it so seamlessly. So we were just going to talk about digital currency, and I know that's a hot topic right now. Cryptocurrencies, both global and intangible. It used to be totally unregulated. Now it's starting to get locally regulated, but it's not globally regulated. And so it's a high risk game. Do you think that digital currency, crypto, and the many names in which it's called and the different brands that are out there, do you think that that had any contribution to what's happening right now? And let me carefully craft this question. Do you think, with all your expertise and all your experience, especially with risk, in your perspective, in your professional opinion, is digital currency making the global economy more or less stable?
That's interesting. I'm not sure about the stability, but I think there's a place for it, right? And I'm actually not at all convinced that we're at the end of the story for any digital currency. I think we're nascent stages still. I think that an example of Bitcoin, which everybody knows, I think is mostly equivalent to like a store of value. And you could think of it as gold. It's actually very different than gold. But the idea is that it can store value. It is a cryptocurrency, but it's similar to gold also. It comes along with high transaction costs, and so therefore I don't ever see Bitcoin as being something that you're able to go and easily go buy groceries with or something. Just the transaction costs are steep. The transaction processing time is slow. And so I think it more of like an equivalent store of value rather than truly like the way we use money, the way you think of dollars or something today. I think it does open the door for any of the other coins to step in. And I just don't think I'm pretty well versed in this space as well. And I don't think any of the current coins certainly meet the needs of future demands the way that I see them in any case. So the coins of today will either migrate or get replaced by other currencies that are out there. And it might be the case that one comes along that's supported by one of the large global governments, whether it be ours, the United States digital currency, or the Chinese yuan that they're doing, or any of the others could certainly become the de facto currency that is used around the world. We don't know yet, but the story is still being written at this point.
Great, thank you so much, Rami.
So I'll take a little bit of a philosophical approach to this. So first of all, in your spare time, strongly recommend reading Yuval Noah Harari's book, Abbreviated History of Mankind. One of the best books that I think you'll ever read. And it talks about the fact that money is a myth, right? Eventually, it's a piece of paper that we all agreed that it has some value, right? You can't eat it. You can't build a house with it. Maybe start a small fire with it, right? It's not really a valuable asset. So it's all what we assign to it, right? So the benefit of cryptocurrency is that it's easier to move around the world, right? So before the modern cryptocurrency, you know what was the earlier cryptocurrency? Starbucks gift cards. People were trading Starbucks gift cards around the world, right? Because think about it, if I load up $1,000 on a Starbucks gift card here and I go somewhere else, now I can sell it to somebody for, let's say, $990. It's cheaper than transferring $1,000 via bank, right? So there are a lot of benefits for it, but anything that has a Wild West for it. And you see, I'm not an expert for it, so this is an opinion, not a research-backed opinion. There were a lot of kind of shady applications for cryptocurrency. If I want to hide assets, if I want to transfer money between terrorist organizations, etc., as an Israeli, it's something we are very sensitive to it. I'm a proud American, but I'm also proud Israeli. Cryptocurrency is a way to go. So I think governments will end up regulating cryptocurrency because, first of all, it is so much easier to use. So the convenience factor will prevail, but also you cannot have a currency that is unregulated and made up anywhere else, right? And I think Chris said it beautifully. Think of China launching up the cryptocurrency. Is it safer and more secure than the existing Bitcoins or any of that? Yes. What happens if the United States launches one, right? I will trust the United States, no offense to China, way before I trust any Chinese currency that I don't know who anybody can manipulate. Now, on a personal side, the fact that we have a Bitcoin farming operation just down the road, one of the lakes to us, the environmental damage producing cryptocurrency does is unbelievable. People don't see that. We are literally boiled down the waters and burning a lot of energy in producing an asset that is semi-useful. The blockchain part of crypto, I'm very high on that as part of our investment philosophy. We look for application where we can use the blockchain technology, the means to track assets and digitize them. That I think that's the way of the future. Accounting in a few years will look dramatically different than it looks today because I can audit everything online. But I think we are, completely agree with Chris, we are in the nascent stages of cryptocurrency. Some major shockwaves will occur. I have it in my personal portfolio more as a gimmick rather than my personal philosophy is don't invest in what you don't understand. So I'll wait for the experts to come out with that. But I still want to own a little bit of it to be cool like some people. So.
One thing to piggyback on as it relates to this current crisis, right? So it played a role in Signature Bank. And Signature Bank was, in the same way SVB was a bank to the startup industry, Signature Bank was a bank to the crypto industry. And with the collapse of FTX that fell apart, that really hurt the value of a lot of crypto coins, that hurt a lot of the assets that Signature Bank had on their books as well, and the value of a lot of the firms that they did business with. In addition to that, they didn't get any slack cut from the regulators. I don't think I've heard any of them say it so clearly, but I've seen it referenced around the edges several times. There were significant concerns around money laundering and anti-money laundering practices in the bank. And so when you don't inspire confidence with the regulators, they don't cut you a lot of slack. And so given the opportunity to shut down a potential bad player in the banking industry, I think the regulators just looked at it as an opportunity to do so. Good, bad, or indifferent. I think that's probably, I think crypto led to that firms kind of going down for those reasons.
Thank you both. And Chris, the couple of times that you have spoken about, global finance in my international business class, it's interesting that money laundering has been like the #1 most requested topic by my students. That's what they want to know most about. And I'm glad that you framed it in such a way as not the best gig to get into right now. That's essentially what your advice was to my students, because I think everybody watches a lot of movies and they think it's all cool. But you're like, Ozark, no, not right now. Today's not the day.
Yeah, no.
Rami, what were you going to say?
I said Ozark was a whole show about yes. How do you effectively do it, right? So
yeah, I think every MBA I know was obsessed with Ozark.
Well, as an attorney in a prior life, and I may not been involved with setting up shell corporations and Vaduz that owned stock in shell companies in British Virgin Islands that owned shares in companies in Cyprus, and money may have not exchanged hands in unrecognizable and
this is being recorded, fashion. Mr. Katz. This is being recorded.
May have not be happening. I may be just making it all up. Who knows?
Right. It was just an Ozark episode. You're rehashing. Okay, so I'm going to skip a couple questions just because we have about 15 more minutes to do questions, and then I want to make sure that we allot 10 minutes for Q&A. I do want to talk a little bit about other currencies that are erupting, and my students are very curious about this. So let me read a couple of headlines. One is from Bloomberg, and that's from April 3rd. The other one is from April 2nd from Al Jazeera. And from the Bloomberg article, quote, China's yuan replaces dollars, the most traded in Russia. Cooperation with China has deepened as sanctions took effect, and Kremlin urges conversion from, quote, toxic currencies to, quote, friendly currencies. And then the Al Jazeera report, quote, trade between the two countries, China and Russia, hit a record of 190 billion equivalent to US dollars last year, with much of those payments made in Chinese and Russian currencies. And the two biggest geopolitical rivals of the United States want to counterbalance the dominance of the dollar worldwide. And we know that, the dollar is quite popular, but, we're going to talk a little bit about how much longer. And then the last thing I wanted to quote before I go into the question, again, this is to make sure there's context so that people are aware of what's going on. According to foreignpolicy.com, quote, a BRICS, and for those of you not familiar, BRICS is Brazil, Russia, India, China, and now there's an S, and that S is for South Africa. That currency could shake the dollar's dominance. And a quote from Brazil's president, Luiz Inácio Lula da Silva, and I really genuinely hope I pronounced that correct. This is his quote. Every night, he said, he asks himself, why do all countries have to base their trade on the dollar? So my question to both of you is the US dollar in trouble? And do we go back to the gold standard? What are your thoughts right now about the health of the United States dollar? So Chris, why don't you start that one?
Sure. Okay, let's take the question separately, if you don't mind. So the idea of Russia and China and other actors choosing to do trades in their own currencies actually makes an awful lot of sense to me. It's understandable. The countries that you listed, you could also throw in Iran and North Korea, are all OFAC countries as far as, they're all countries that have severe sanctions placed against them by most of the Western world. In fact, not if all the entire world, other than the 8 or so countries involved. Therefore it's difficult for them to do business with the rest of the world. It's difficult for them, therefore, to get their hands on US dollars to do any trading with. So it certainly makes sense that they'd want to do trading in currency that they have access to, whether it be the Russian ruble or the Chinese yuan. And normally these decisions made about which currency to use are based upon the largest and most stable economy that's available, and that you use their currency because they'd therefore be most trusted. Right. So it's not surprising to me that those actors want to go do their own thing with their own currencies. In fact, none of them are friendly with the United States. And so therefore they'd want to do in their own, they're telling themselves a story that they're doing this to weaken the US dollar, but in reality, they can't get enough dollars to do these trades anyway. So they need to come up with another mechanism to do so. So that's not surprising. As for the US dollar versus the gold standard, the US dollar was chosen as the currency of choice because at the time that the gold standard was abandoned, we were, just as I described, the largest and most stable economy in the world, and therefore most trusted. We remain that status largely, with China's right there knocking on our door and India not too far behind. But at this point, we retain that. If you look at the amount of leverage that the US government's been taking on in my lifetime, it's certainly growing and probably causing some of my destabilization. Our inability to have a budget come before payments are due on June 1st is becoming more and more concerning. And so therefore we'll give other world leaders, I think, a rational question like, how stable is the US? I don't think anyone out there is more stable than us. As far as going back to the gold standard, that's a terrible idea. I'm sorry.
No, Chris, don't sugarcoat us. Tell us really what you think about it.
Don't be subtle.
Sorry. To want to go back to the gold standard would be to fundamentally not understand the way the economics work around the world today. And you can always, I guess there's people that always want to go back in time and think things were better when. But when you look at the reality, if you don't have gold, you can't really grow your economy. So where are you going to, if you want your economy to grow, where are you going to be getting more gold to increase your money supply to allow your economy to grow? So I wouldn't want the US or any other civilized country to be doing that, because you'd be de facto limiting your growth to your ability to go mine gold. Well, that's nonsensical for most countries around the world. And that's just the beginning of why I think it's a terrible idea. But there's hundreds and hundreds of economists that would agree with me that like going back to the gold standard is not the right move to do. If you want to use it as an investment in your portfolio, as a store of value, and you think like, and it traditionally has been, God bless you. And I think there's a lot of value in doing so, but to use it as the backing of our currency is not a good decision.
Thank you. And I appreciate, and Rami, I can't wait to hear what you have to say. I had to ask the question, right? No. Whether I agree or disagree, I had to ask it for multiple reasons. And I think you both gentlemen understand why. Mr. Katz, your thoughts about this?
Alex, first of all, yes, that question is literally being asked by even today by many people. So I thank you for having the courage to tackle it. So I'll maybe tell a little bit of a personal story to explain the effect, right? Exactly to illustrate the point that Chris made. So a good friend of mine, literally a week before the war in Ukraine started, so it had a chain, I think about like 30 or 40 healthcare clinics over Russia and Eastern Europe, right? People there don't trust their own medicine as much. So it had a lot of medical licensed doctors, a lot of, that's right, American licensed doctors or European licensed doctors and American and European equipment there. And people with money would come and get treatment from a doctor that they feel will actually is not guessing as they're going along, and well, actually knows the process, right? And that's an illustration what we're going about. And he was lucky out, sold the practice to a Russian semi-oligarch, right? We're talking about hundreds of millions of dollars of value sale. The deal is signed, everything, the money is deposited in escrow, all terms are met, war breaks out. Now what do? You cannot take the money out. So to take the money out, they had to take the money, move it to Azerbaijan. So go from it's from dollars to rubles to whatever the Azerbaijan money is, to take it out to Turkey, to bring it out eventually to its final destination, right? And that's the best, I think, in me, a best illustration of exactly what Rick was talking about. It's yes, BRICS is a powerful set of economies, but you can see the common denominators here. They're not democracies. You do not trust what they're doing. All of them are involved in some sort of a major conflict, right? I think the big change that happened is the fact that we always, or my perception, I think most would agree that the perception of the world, it was United States, China, and Russia as the three big powerhouses. And actually Russia would have been ranked as number 2. And suddenly you see that Russia cannot hold its own against Ukraine, right? So this old dynamics shakes up. Sanctions are escalating. So who am I going to trade with, right? It said, and by the way, if dollars switch around, eventually the United States government will if dollars are switched around in large quantities, eventually some banking will report to it to the United States. So I'll know about your trades, right? So I don't want the United States to know about my trades. I cannot really trade with them. So I have to come up with an alternative. So very simplistically, I'm not as worried about it. And this is why you read about it at Al Jazeera, except for as opposed to New York Times or Wall Street Journal, right? Because it's that side of the world. I do think that the United States is relatively in a weak position right now financially. We are, I think, the tallest pygmy in the room, right? The world's everybody else is gonna even more pygmy than us, and that creates lack of stability. I will say it this way, it will be interesting what happens vis-a-vis China and Taiwan. And I know that it's a political situation, but that I think will have more influence on what the currency situation around the world will be. Because it'll be interesting to see, is China a hollow threat like Russia was? Or is it really a much stronger powerhouse? To me, the tiebreaker here is India. India is a completely different animal than China, a very kind of a diamond in the rough that I don't think has expressed its strength yet. And where they fall, that might be a very big indication. Now, so BRICS together, right, is slightly larger than the US economy, right? But but it's not a fair comparison. If you compare BRICS, it's all the companies that are gonna trade in this new currency. You combine all the countries that are trading in the US dollar, we are orders of magnitude difference, right? So it's not a fair comparison, right? We're going to pitting this from a journalistic standpoint. It's a cool story. Oh, all of BRICS together against the United States. That's not really how it works, right? Because you need to trade with somebody, right? And you trade, and Chris said it beautifully. Money is a piece of paper. I want to know that there is a credible government around behind it, that if I ever tender that bill, the piece of paper, they'll actually give me something of value on it, and will not say, sorry, we changed to a different color, and whatever green you hold is no longer in fashion, and we don't honor that. That's what happened with Russia when Russia defaulted, and I lived through that. Right? We were getting 10% a year interest from banks until the party stopped, and then suddenly assets disappeared if you didn't know about it in advance, right? So eventually you cannot hide in the global economy.
Thank you both. And part of like the word that just keeps popping in my head is tulips. Right?
Yeah.
So, tulips. And for the audience, by all means, look up Dutch tulips and currency, and you can have your own separate history lesson on that. But that's just what keeps popping in my head is tulips. And I'm glad that you brought up India. It is very much a different kind of animal. And right now, I've been reading a lot of articles of that India is pretty much on track to beat out the population of China.
Mm-hmm.
And if you think about all that and the education class there, it's a whole other thing. You
Right.
know, it's a really whole other thing, and I really hope it kind of just breaks from the pack and leads its own way. Okay, so
Alex, I have to say it. So an amazing research tool on India is Indian Matchmaker. You have to watch the show. It's a great,
I'm obsessed.
it's
I'm
a
obsessed.
non-financial way of learning about the culture.
No, I'm obsessed. I already finished season 3. We'll talk separately. I'm obsessed with that show. Okay, we have about 4 or 5 minutes, and what I think I'm going to do is I'm going to take like the remaining 4 questions. I'm going to take 8, 9, and 10 and group them together. And then question 11 is really, really important for our audience. So you're both obviously just incredible in your fields, and you are also, you know, you are citizens, you are consumers, you are dads, you have kids in college, and from everything that's going on right now, what do you think is the turning of events, and both as experts, but also as everyday humans with, you know, kids to support? You know, what kind of either future or any kind of advice, or, you know, what is kind of like your, you know, step back and kind of look at it from a macro side, input, advice from people who may be really panicking right now? Because it's real. I feel the tension. Sometimes I feel it within my students based on the questions they ask. Sometimes I hear it from some of my family members or friends. There is a genuine sense of panic, and there's a million factors contributing to that, including the fact that legitimately the spike in anxiety since COVID has climbed exponentially. So we're just, you know, COVID, the war in Ukraine, the banks crashing, right? There's like all these external factors, not being able to trust all media, conspiracy theories, right? All this. You both have a really great way of just kind of taking a step back and saying, okay, calm down. Here's reality. So in terms of your expert lenses, as well as just, you know, being of dads of kids in college, what would you want to share with our students, but also, you know, faculty, administration, and any of the other folks that are listening in from all over right now? Rami, would you like to start there?
Sure. So first of all, everybody should take a deep breath. Right. That's the big, as always, God said, meditate for 2 minutes a day will do wonders for you. Right. Look, 80 years ago, the world was on the brink of extinction. Right. There was a race who will develop the atomic bomb first. Luckily, what we consider the good guys, our side got into it first. So in that context, we are far from there. We're far better from that. So it's all about a point of reference. Secondly, use common sense. The most influential book I ever read was Swimming with the Sharks. And it was a line that I'm paraphrasing. Find a place on the world where you can say, I can do this. I'll take care of this, right? Just figure out how to add value and real value, right? Basically understand what your customers want to do. And that's, if you figure that out, you'll be always appreciated and always valued, right? So don't show up to work. Find, said, what can I really solve? That's kind of that's the safest bet. The other part of it is diversify. But when I say diversify, right, it's diversify and embrace. I see people either don't diversify at all, just put all their money in one basket, which is a problem. The next step, you see people diversify across a set of safe assets, right? Which is, okay, that's good. Now, remember my bias on venture capital, so I like risk. But in my mind, when you're diversifying, take 5%, 10%, whatever you can afford. Put it in a risky pile somewhere. It doesn't have to be venture capital. You want to buy cryptocurrency because you think that's going to rock the world? That's fine. Make sure that you have that across your risk profiles on it. So your regional banks are not going anywhere. They're usually safe. They'll lend money to the small businesses next door. They're not gonna go up and down, right? So put money there. Put money in some investments account. Take a crazy idea that you think might work and either put your personal money in or join somebody else. Really embrace the risk platform, because the only constant is change. Nothing will stay like that forever. Just, we need to understand that things are constantly changing. This is not a novelty. This is how things are. Once you embrace that, very, very easy. And one of my mentors taught me something very early, said, life is tough and then you die. Once you feel that life is tough, that's your expectation. There are no surprises anymore. You're not guaranteed anything rosy. That will be it. Life will be tough. Eventually you'll survive. That's it.
No, I appreciate that, Rami. And it reminds me of the one continuous business lesson that they drilled in us at the Simon School since day one, every class, every professor, every semester, every year, markets never rest. And if you think about it, that is so much more meaning than just about the stock market, right? It's about life and
Yep.
and markets never rest. And today the world is moving exponentially quicker. And I remember, Rami, you and I sat in a class in managing global technology with our professor who was a senior executive of Kodak. And he asked us a question, is there such a thing as a sustainable competitive advantage? And people were like, they were answering things. And you and I just sat there and we were like the grumpy nose, right? We were the grumpy nose in the room. And he said something brilliant. And he said, speed to market.
Right.
Speed to market. And essentially, that is what I'm hearing you say. Markets never rest. And the only sustainable advantage is speed to market.
Yep.
So is that accurate before we
It's
move
a good way of saying it. Be aware of what's going on. Use your common sense. You don't have to be first every time. Just don't be last. Right.
Right. Exactly. Thank you so much. Okay, Chris, your thoughts.
Yeah, sure. A little bit of a different take, but I'll touch on some of the same ideas. In the banking space, I know there's a lot of concern. I get asked by my friends, families, and neighbors, is my money safe at X bank? You know, maybe, I mean, not even maybe. I don't know whether X bank is going to survive or not. You know, that there's not been a lot of foreshadowing on a lot of these bank failures. But one thing I can tell you is that if you have less than $250,000 in your bank account at or in all of your accounts combined at any one of these banks, you're fine. There's no depositor out there that's lost any money. Even with Silicon Valley, where 90% of their depositors had well over $1 million. So no one lost any money. So I wouldn't really worry about that a whole lot. And the disruption involved was very limited as well, other than a few days where there was they slowed the flow of external deposits. But once the FDIC came into their job and seized the banks, depositors had access to their funds again. So very limited disruption. I wouldn't lose 1 hour of sleep over it. I would just continue, trusting the bank as you should going forward. As far as just better life advice, I agree with a lot of what Rami said, is that, find something that you enjoy, that you can then provide that value back to other people, and that'll put you in good stead. And one thing that I tend to spend most of my career in very technical environments with really, really brilliant quantitative mathematicians. Some of them are great, so much better than me, certainly, is coming up with the right answer and getting so quickly, like that speed to market, but they fall down on their ability to communicate those results to other people. And so again, when going back to the Simon School, one of my finance final exams was an essay format. So of course you had to solve a problem, but then you had to, in a paragraph, no longer than 6 sentences, explain like what the business impact of that result that you just calculated meant. And if you can't do, or if you can do that, you will stand out from others, your peers around you, and you'll have a fantastic career ahead of you. So I would think about that. How do you provide value back to other people as a good way to launch your career going forward?
Thank you. Thank you both so much. And you kind of answered like 4 questions all at once. And before we actually we have a couple of questions here. Rami, anything else in terms of if you are currently giving advice, and again, you've got a son in college who's continuing the U of R tradition, generational tradition in your family. You also teach, Simon business students. What kind of like passing of torch, or I wish I knew this 20 years ago, right? Especially today's world, we all know that Gen Z is wired very, very differently. And that's like a whole other separate webinar, right? They don't like the world they were born into, and they are disrupting it. And they are very fiscally pragmatic, and they are very technology savvy, and they don't care about hierarchies, right? And at the same time, they've got to integrate themselves into this world. So what advice would you give to business students today, whether it's undergrad or MBA?
So look, I always joke that every time I went to a presentation like that as a student, people told me, follow my passion, right? And the people are presenting that comment to follow your passion, I usually made a ton of money, like smelting iron or moving garbage. I said, really, that was your passion going on? No, you find something that you are good at, you found your opportunity, you push hard and you push into it, and that's how you made your money, right? So look, explore within reason, find a path, push forward, basically commit. It doesn't matter really what your path is because nobody knows about it. It's like if you would think about it 15 years ago, the answer would always go to the sciences, become an engineer, right? Because today with all the AI tools, it said, okay, the more discrete the task is, the less relevant. So maybe philosophy is the answer. I don't know what the answer is, and I don't know what your passion is, right? And nobody really knows what the future will be. You find something that you're good at, you find something that's working, push at it hard and work and show up, right? The statement that common sense is underestimated is so true, right? It's I work with our analysts, which are mainly students, and something very basic. Distinguish between what you know and what you think. Right. And because
that's a much bigger problem these days, Rami, than
right,
just
because people are very happy. Oh, I think that I really don't care what you think. You have no life experience. You have not done anything meaningful in the world yet. Doesn't mean you're not smart and bright, but why would I care what you think? Right. I can do the thinking as well. I need to find what you know. So you want to tell me or report something, read about it, right? Find something, experience that, volunteer in that space, make progress, get motion. I always thought that, to me, one of the fascinating parts of life is, as a physics nerd, the friction coefficient of the static friction coefficient is higher than the kinetic friction coefficient, right? So the minute things are moving, there's less friction in the system. Just find a direction and move. Don't bother yourself on too much on the question. Think about it, about what's the right direction, because frankly, nobody knows. You haven't experienced every profession in the world, so you cannot really choose, right? It's like dating, right? For me to find the perfect purpose, assuming there are 3.5 billion women in the world, I need to look at all of them, talk to all of them, and then I can pick it up. That's the only rational way. No, that's impossible, right? So you need to take a leap of faith of what's available, what's within my interest, and what can I accomplish. The same thing with life. So,
great. Thank you so much. Chris, any final thoughts?
Yeah, I agree. You try to figure out like what you enjoy doing and start that as your pathway going forward. The one caveat that I have to say is that I've seen with a lot of some of my friends, their children who are going through college, and like a good percentage every year, there's some that just don't make it through for a variety of reasons, right? All the whole spectrum of reasons. So I'd encourage you to think about, if I was a young person and I have 2 boys in college myself, to really think about like begin with the end in mind. And I don't say that like I was never a kid that said I need to grow up to be a head of risk management. That role didn't exist when I was a kid. But to have some idea of like what you're good at and the path that you're going, so that the investment that you're making, and you really are investing dollars into yourself through the form of going to a university, that those likely have a positive payout at the end. It would be really terrible if you were to invest, tens of thousands, if not $100,000 plus, to come out with a job that didn't allow you then to pay back your loans in a meaningful way, right? And that is the reality for a lot of students out there, that they face that risk. And so I just be very pragmatic and thinking about like, what am I good at and how can I leverage this into future dollars, right? In a way that's going to give me a return on the investment that I'm making today. It's difficult. It's not always clear, but again, begin with the end in mind, and everything else will sort of take place or fall into place after that.
I love that advice because it takes me back to like 22 years ago when I was in a study room with Mr. Katz and I was crying over my finance midterm. And I was like, I studied so hard. And he said something so painful to hear and so wise. He said effort is overrated. It's about the result and working backwards.
Yeah, right.
And that advice is like, it's like a Buddha that just came from the sky and said, this is how you need to live your life moving forward. Okay. I know it's 12:30. Do you have 5 minutes for Q&A?
Yeah, let's go.
Okay, so maybe you could just alternate with these questions because I don't know if we have necessarily the time to do all 3. And maybe you can volunteer for, we've got one from Taylor here. Do you believe the US will replace the USD with digital currency? And if so, how can we stop it? Who wants to answer that?
I think it's likely that we will have a digital currency. I don't know to what extent it will replace the paper currency that we have now. We're almost there anyway. I don't carry any cash on me ever. Like things just move around digitally anyway. But if we come up with a crypto coin to support that, it's probably likely to happen. Yeah.
Okay, great.
I don't think there's anything we can do to stop it. It's part of a much set of bigger global powers. We have to play with it. We cannot go against the stream on this.
Okay, great. I actually know the answer that Rami's going to say in this next one, but I'll shoot it out to both of you. What are your thoughts on the proposal to cancel student loan debt, and how do you believe it will impact individuals in the economy as a whole? I'm staying out of this entirely.
Go ahead.
Yeah, I think it's a terrible idea. I'm sorry. People should own up to their decisions, and you chose something. Much respect to anybody who wants to study English Lit, any of the list of professions. Going to college is a way to generate a job. You want to learn something? Go to the library, pick up a good book. It's free of charge. Go to watch TED Talks. There's a wealth of information here. Getting a diploma is to move you down your career. That's my perspective. You want to get a diploma for the sake of a diploma, more power to you. I didn't sign up for that, not my bill. You pay for it, you do for it, right? Said any degree that leads you to be a barista at Starbucks. I love Starbucks. I shouldn't be paying for that choice. No more than the person that decided not to go to college and start a construction business, right? And had to take a loan to buy out their pickup truck, right? Or put it down in deposit, right? We're not offering to pay for that. So I think it's fundamentally unfair, and it just creates a free rider problem.
Great. Chris, any thoughts?
Yeah, similar. I'm not the biggest fan of getting rid of the debt for the reasons that Rami said. It also, I think it's broader context in that systems of fairness or equity, and just as he touched on, like, how do you, if you're going to give this benefit to some group of class of people, that seems somewhat fundamentally unfair to a different class of people, right? But if we did say as a country that we'd like to give everybody the opportunity to get a 4-year education or a 2-year education, the right way to do that isn't giving student debt for free. That's just saying that we're going to fund, national universities instead, and make them tuition free, and you can go if you want to go, right? I think that'd be a much more equitable way of doing it. So not really the biggest fan of it. It doesn't seem like it's going anywhere anyway. So a little bit moot.
And I'll just, Chris, wholeheartedly agree. I'll just add, so to me, it's a matter of national security. We need nurses. I'll give you free education if you become a nurse, because that's something we need. We need teachers, free of education if you become a teacher, right? If we need English Lit majors, no problem. We'll pay for English, but it's based on need, not based on your desire to study whatever you want to do, right? Life is not free.
Right.
Okay, great. Okay, last question. This is from Lamont. On a smaller scale, if someone is starting a brick and mortar business, you have done years of research and you are ready to go, but, and we have another question after that, but you are just a little short on cash. How do you approach a venture capital organization or bank? And then after that, we'll take one more question and we'll be done. Okay.
I'll take it.
That's all you. Yeah.
Well, I think you're on the banking side. Look, it's irrespective of what you're doing. First of all, major kudos, because entrepreneurs are really, in my mind, are the backbone of the economy. They're building the jobs that we all go to eventually. Net new job creation is coming out of small businesses. So nothing for respect, whatever you're trying it. And I'll say this, when you succeed or fail in business, your learning curve, what you will learn will be invaluable. You'll come out a completely different process out of this a completely different person out of this process, whether you succeed or fail. Full stop. In order to get funding from anywhere, whether a VC, an angel, etc., you need to understand, am I the type of animal that they invest in? So if you want to go to a VC, find their website. They all have portfolio listed. Said, do I see my older sister or my older brother of a business in that, right? My surrogate said, am I the type of animal they invest in, right? Because the amount of time I spend with would-be entrepreneurs that I have wholeheartedly want to support, but they're coming in a business that is not VC fundable. My goal is to give you $500,000 to $1 million, and within 7 to 10 years, I need to collect about $10 million. That means that you need to grow about 20x, accounting for dilution, to give me that, right? If you're starting a pizza shop, I love pizza. No way you're growing 20% over 10 years. It doesn't go, 20x over 10 years, right? You will grow from maybe $700,000 in sales to $1.5 million over 10 years. That's roughly, right? So think if I am that business. If you're going to a bank, understand what the bank wants, right? They want 3 years of financials. They want roughly steady accounts receivable. Understand where you are. Life doesn't change because you want something, right? So understand the rule of the game, go for it, and take some risk, right? That's where it is.
Great. Okay, one last question and we're going to close out. This is from Andrew, and I think the question that he is asking is a very universal question right now. So I think it's going to help quite a few folks. What advice would you give to an entrepreneurial person who works full time due to massive debt, but who also desperately wants to create a business? So, whatever are the causes of somebody's debt, they're working and they're, paying their bills, but they also really want to go ahead and pursue their ideas. What can they do?
There is no I in entrepreneur, right? So find a team, bring up the people together, right? Nobody succeeds on their own, right? The stories in the movies of Mark Zuckerberg building Facebook alone, that's not how it happens, right? So build a team, right? So if you have the passion and the idea, find somebody else with complementary skill sets, find somebody else who have disposable income and start, right? If you find something that has meaningful impact in the world where customers will benefit from it, businesses will benefit from it, you will, and you tell the story simplistically, and don't wear rosy glasses. Just be realistic, be optimistic, but realistic. You'll succeed, right? So if you don't have the cash, find somebody else that has the cash. The first questions that you need to sell is your dream. That is really the biggest issue. If you cannot bring partners to your idea, your opportunity, you will not go anywhere, right?
Yeah, I once heard from a very prominent screenplay writer. He said, your script is only as good as the people who want to be in the movie.
Yep.
And that's like a really good metaphor for life. And the other thing he said is, if you need them, they don't want you. And I thought that was another great answer. Okay, so Chris, is there anything that you would like to share before we close out?
No, I think that's great advice. I was going to piggyback a little bit, but let's close out. I know we're tight on time. So
yeah, and I appreciate you both hanging on an extra 8 minutes. First of all, Chris and Rami, thank you both so much for your time, your wisdom, your guidance, and most importantly, from your honesty. The truth zone is really critical today, because the truth is the only thing that's going to allow us to move forward and live in an honest way and make smart decisions. And I really appreciate the truth with which you came to the table with today. Very, very grateful. And I think a lot of people are as well. I also want to thank our students, faculty, administration. Again, big shout out to Heather for making the world spin, and everyone else who joined us today. And I think it's safe to say, Chris and Rami, if you ever want to come back, I would love to talk to you guys again, but also let's meet IRL as soon as possible. And thank you, everyone. And this is Alex Sequoy for the Monte Ahuja College of Business here at Cleveland State University. Thank you so much and have a terrific day.